Welcome back. Sugar stocks continue to bear the brunt of the centre's decision to impose restrictions on the use of sugarcane juice for ethanol production. To talk about this, we're joined by Vivek Saraogi, Chairman Managing Director, Balrampur Chini, on the show now. Vivek, morning. Thank you for joining in. First, if you could quantify the impact, what percentage of your sugarcane juice right now is diverted for ethanol production?
So we as Balrampur were planning to divert 1 crore 20 lakh quintals of cane in making juice.
Okay, and this is a percentage of your overall production of sugarcane?
Approximately about 10% of my crop was being used in Balrampur for juice making directly.
Can you quantify the impact of that, maybe on your margins, on the overall realizations?
No, so it's not possible to see it that way. One has to see now this cane will be diverted in making sugar. That's how government is raising the production of sugar. And what will be the sugar realization will determine whether there's a loss and what's the, if there's a loss and what's the amount of loss. I mean, what's the amount of the loss?
Vivek, hi, morning, Prashant here. So you're saying that you were planning to divert 1.2 crore quintals of cane for sugarcane juice for ethanol. That's the...
Yes,
right?
That 1.2 crore quintals of Balrampur, that's approximately less than 10% of my overall cane crush in 2 units was going to be used not to make a grain of sugar, but entirely going towards juice.
Now, my colleague Manisha is also joining in, and she'll also take questions. Manisha, welcome on. I just have one more question, and then Manisha comes in. Vivek, so what is the impact, net impact, earnings impact, if you can quantify it because of this? You must have had some ballpark calculation in mind.
So, Prashant, let me tell you one thing. The earnings impact, I was just saying on the Avas channel, the earning impact is going to come out of sugar price reduction. That's it. So if you don't make ethanol, it's not that the cane you've crushed has gone to waste. It's made a different product, it's made sugar. So that will come out as an excess. That's what you see what the government has done. By doing this measure, they've suddenly told you that this is all you can make for diversion, and hence more sugar is on the way. So the country's production, let's say, will increase by 15 to 17 lakh tons, which will have a bearish impact on the sugar price. So our balance sheet or any company's balance sheet the loss which will come is the reduction in sugar price, which we are yet to quantify.
Right. On Vivek, but on ethanol, wasn't there you selling sugar as compared to selling ethanol? I mean, isn't ethanol more profitable? Isn't that impact as well?
No, Prashant. No. So you got to see what price you're selling sugar at and what price you're selling ethanol at. There is a ratio. So if you were selling sugar at a certain price and ethanol at a certain price, maybe, at some point ethanol might have been profitable. At some point, sugar might have been profitable. Like this, I would say sugar was more profitable.
Okay, so what is that ratio? If you can just kind of go into that a little bit from your perspective.
We do that a little bit, because there's a B-heavy price, there's a juice price, what purity you go in. So there is a various product connect to the sugar price relationship to the ethanol price. So all I can say, and your question is valid, sugar price dipping from here will cause the harm.
And do you expect, in your assessment, sugar prices will dip because of this 15 to 17 lakh tons of sugar coming in? By how much, in your opinion?
No question.
An estimate?
No question. It's going to dip.
Can you estimate? I mean, approximately, will it cause a 5%, 7%? What's the sense?
Prashant, minimum, the lowest figure would be 5% plus.
Okay, the lowest drop?
2 rupees minimum. Okay. It can come off more.
Okay, so right now, so from what level? From 40 rupees or so?
No, we are selling at approximately, I would say 39.
Okay.
And, I'm guesstimating here now because the market hasn't opened from yesterday. There is still, assessments going on. So this is I would say, best case scenario.
Okay.
And that's going to impact everything.
Yeah. Manisha is also with us. Manisha, yeah, please.
Yeah. Mr. Saraogi, I also want to understand that we do know, if you can quantify this for us as well, that almost 65% of ethanol comes in from B-heavy. Is that a change in there? I mean, what does your company do?
So the second part of the notification, which we read between the lines, is what has been tendered till now is what will be accepted. So there is
Yeah.
no window for a fresh tender for B heavy also. But I'm sure that, we will represent, and maybe if you're not being able to make juice in a factory, right now you've been told to make C heavy, but I'm sure maybe government will recognize that to that extent, somebody who's not allowed to make juice in his unit can make B heavy in his unit. I hope. That's a small part of the correction.
Absolutely. Also, Mr. Saraogi, we've seen various investments and capacity building come in many last years when it comes to ethanol. With this directive now, are you going back to the calculation table?
So, Manisha, as I was saying prior to this, I think it's a move which is just aimed for 6 months. I said it could have been done in a much, much better fashion. The same objective could have been achieved in a far more graceful fashion without sort of ruffling feathers and hurting, sort of the environment and confidence of all concerned. Having said that, what is done has been done. So we will try our best to meet and understand, also give some measures, maybe, increase the C heavy price to compensate us, increase the B heavy price also to compensate us because the quantum of tender has been curtailed. So we will come up with our ideas. We are, sort of making our representation. We will seek time. We'll go to the government. So you see, there's been a cost increase year on year. FRP increases, your other costs increase. Till now, the government used to recognize the cost, give you a price of B heavy juice commensurate to the increase in FRP. Sugar price was recognized accordingly. This was a policy which if I remember correctly, came in 2015. And thereafter, for the last 8 years, it has sort of yielded fantastic results for all the stakeholders. Farmer, he is able to grow as much cane as he wants. We went to gross production almost 380, and the net was 330, 340. I don't remember the numbers exactly. Yeah, around. So if at any point that production was made, the industry would have been dead by now. But the export policy was clear. Surplus was allowed to be exported. The diversion was clear. The government came and said, please divert more. We want to achieve E20. E20 will not happen with B heavy. Please put in new juice, new grain capacity. Grain prices were increased midway because rice price went up. So the details I'm giving you is just telling me that government has been extremely sensitive, understanding, and very correct in its ability to assess everything till now. The grouse is that we could have achieved the same objective in a far more patient, calculated manner instead of this knee-jerk reaction.
Mr. Saraogi, one more thing. I do also understand that I was going through some detailed data yesterday, and we do export molasses as well. I mean, do you think that is one area that can also come under consideration?
Manisha, I'm not even going there, and let me handle our business. And export of molasses is not in my brain. That's not important in this whole conversation, if I may say so.
Okay. Vivek, if I can, so the thrust, would you agree, seems to be to use grain for ethanol, slightly longer term, and so, keep sugar for sugar. Is that the broad idea?
No, I don't think so. So let's understand, this year, the perception was that post the diversion of 3 million ton, which was the accepted amount of tender. So there was a C1 cycle, okay? Everybody tendered their Balrampur, the whole country. The quantum of tender in form of B, C, and juice will tell you what is the diversion. So in C1, and there was expectation of C2, C3, cycle 1, 2, 3. In C1, the calculation of sacrifice of sugar was about 3 million, south of 3 million, a little bit maybe. Now, after that sacrifice, and we have satellite imagery, we've been predicting production over the past few years, all concerned, and have been like 95% correct. So the net production was coming out to be 29.5 million post this diversion, which means the gross was 325 or 32.5 million. Now 295 outweighs consumption by 1 million. 28.5 is the consumption. Now, even if there was a panic, let's say that, okay, our opening stocks are not very high, and addition to inventory will only be 1 million, I'm not comfortable. So we could have easily said there can be another million addition to inventory. There were ways we would have said buy 70% of our tender. So we could have had 3 months to plan our business, done things patiently, and we could have achieved the same objective and announced it that these 10 lakh tons would come more into the system. And that would have also had a bearish impact on sugar price, but not in this kickstart manner.
I completely agree, but I agree with that. So this causes disruption, which perhaps, as you say, could have been avoided, and there were other ways to do it.
Exactly.
But do you think this is just to kind of make up for this mismatch which the government sees for this year, and that's it? So it's like a short-term measure, and it'll be back to...
I would definitely.
Yeah.
So I'll only say one more thing. When production is in doubt, so I would also agree with the government. If I was the government and if I'm a citizen of the country, I would not like my consumers of the country to be blackmailed into paying some stupid price. So as responsible people, we could have come up with far better ideas. And let's understand one thing, we're businessmen. If an asset has been put in place and it's for a lifetime, merely not using that asset for 1 year is not to kill people's minds. At least doesn't hurt me, because I want to see that my asset is for long term. And, we run it in a manner which is acceptable to all concerned. I must not look to, get a stupid realization and look to, sort of blackmail or take advantage of a situation. So yes, there can be years even henceforth when this program might have to be curtailed because of the lack of cane. And that being so, fair enough. It has to be done prior to production. It has to be planned, debated, and done in a fair manner, which is absolutely acceptable. So my cost has to be recognized somewhere, which has been done from 2015 to date. Even today, we would go and say, please increase the price of C heavy and B heavy because you curtail the quantity, increase that very, 5-7 rupees higher than you think to give us some reprieve, which is not going to hurt your consumer. Sugar price is going down. Please compensate us here. Reinstate this program the moment you see more production coming on the ground. So yes, we will debate. And yes, there may be years, I repeat, where you do not get full ethanol capacity because you don't have much cane. Please allow a little bit of a higher sugar price, which is reasonable. Which one is not saying let go bananas, 50 rupees or something. But if this deserves a 5% hike at some point, it should be allowed.
Mr. Saraogi, I have one final question. And while we all agree that this perhaps could be a short-term measure, on a longer-term way, I do understand that the sugar sector has been asking for a long-term ethanol pricing policy. There has been a longer-term vision as well, which seems to have been dented a bit with what the government perhaps has done right now. So for a longer term, while a sugar MSP increase, or it's about a longer-term policy formula for ethanol, etc. So what are going to be those asks right now, which the industry has been pushing on for some time?
So Manisha, as I say, when the hurt is immediate, the reaction is always a little sharper. So the reaction I may be giving is sharper. But yes, I have full confidence in our state and central government. So this is a brainchild of the central government. And a lot of things has been done by the state on its own side. So having brought things here and having our Prime Minister's vision, and I must compliment this vision 2015, the way it was envisaged and the way the stakeholders have gained, this kind of production in UP and India could never have been thought of. So farmer was allowed to grow his cane, oil marketing companies bought thing. Even when crude went to zero, the government in COVID days, the government did not renege on its promise for a second. So hats off to these people. But having done it suddenly hurts. But Manisha, to answer your question, I don't have a doubt that the long-term program will get dismantled or disturbed. Yes, please understand, priority 1, feed the country. We are with that program. Priority 2 is ethanol, which both 90% of the, if I take 10 years, 8 years, they'll go hand in hand.
Vivek, thanks for being so candid and sharing what you feel with us and our viewers here at CNBC-TV18. It's a pleasure having you with us here, and we hope to kind of sort of reach out to you once again when there are more developments, when this starts to feed through into sugar prices, etc., as you say. Yeah.
So I just would leave by saying that objective of the government, if it was to reduce price prior to election, we would have come, walk hand in hand with that objective. This manner is what hurts. That's all.
Got it. Got it. Thank you very much, Vivek, once again. Appreciate you joining us here on CNBC TV18. Thank you. Well, 70 points. Manisha, thanks very much for joining in and kind of, guiding us through that conversation as well. You got, 20,975 on the Nifty, and it's looking pretty strong. We'll take a quick commercial break here. There's more coming up on the other side.
CNBC TV18